What up, everyone? Welcome back to Financial Education and Business, and today we're going to be covering the stock PayPal. So over the course of a couple months, I've been looking at the stock PayPal, and I want to just quickly just cover what's going on, where are the prices, and what are the investors saying out there? Is it undervalued, overvalued? How's it compared to the S&P? If you like this, go ahead and leave a comment. Go ahead and subscribe to this channel. So I want to just quickly look at the historical trend on PayPal. So to go back, I'm looking at this chart on the daily to go back to 2017. As you can see, PayPal has always been outperforming the S&P 500. As you can see, here's the S&P line and here's PayPal stock. But in 2021, PayPal took a couple things happened here. The market overall saw interest rate impacts here, and as well as the fundamental of the business changed, management changed, and PayPal is, compared to the S&P 500, is way down, right? Here's PayPal, here's S&P 500. So the S&P, as you can see, since October 2021, is outperforming PayPal. The question is, all this time it outperformed, and out of nowhere something changed to where now it's doing not as well as the S&P 500. New management did come into the business, and that is the reason why it's down. I believe that's the case. But overall, PayPal is a great stock. I mean, they haven't stopped providing services to their clients, right? So right now we're seeing PayPal at $59.33. And let's look at the 1 year. We're looking about PayPal's been down about 18.75% in the past year. In the past 5 years, we're down 49, almost 50%. Maximum, since it looks like IPO in 2015, it's up about 53.31%. We just looked at the chart, so let's look at the financials real quick, right? So PayPal, as you can see here, revenue has not stopped growing. Revenue has always been going up, right? Maybe the rate at which revenue has been increasing has changed. As you can see, 2016 revenue was about 10 billion, 13, 15, 17, 20, 21, 25, 27, 29. So revenue consistently increases year over year. Hasn't stopped growing, but the rate at which the revenue is growing is the only thing that is slowed down between 2022 and 2023. As you can see, it's been growing 17 to 18% from 2016 to 2021. All of a sudden, between 22 and 2023, the revenue growth rate has slowed down. Cost of goods sold, so how much does it cost the company to sell any products or service that they have, has it's been up about 20 in the 20s, in the 17%, which stayed about consistent, but it's slowed down here. Operating expense, so this is really good news, where you see 9%, 17%, 7%. Here 2020 they had significant growth in their operating 27% operating expense, but it looks like, as you can see, in 2023 the operating expense was down 13.55%, which is good news. The company is paying out less money, and maybe who knows to why. So net profit for the company, as you can see, in 2016 it was about 1.4, and almost consistently grown year over year until 2020, and then it kind of slowed down. It slowed down here. It didn't grow as much in 2021, 22, and 23. It bounced up to $4.2 billion. So overall, the company is growing. Like, it literally has not stopped growing at all. However, the stock has been going down. They have $48 billion in liabilities, the current asset is $62 billion, so they'll be able to cover every single penny of that current liability and still have cash left over. That is very healthy. It just means the company has more assets than they do liabilities. When we compare the long-term debt, right, they have about 9.68 long-term debt, and then they have 19.6 long-term debt. So this is significant number. This is significant value. Once again, the company is able to cover all of their long-term debt and still have about $9 to $10 billion left over. This is a healthy company overall. They're able to pay debt, they're able to take care of themselves, they're not overly leveraged, which is a good thing. So they're being financially responsible. And this is what they're saying right now. So you see a lot of analysts right now following this stock specifically, and out of that strong buy, you got 16 of them saying it's a strong buy out of the 48 analysts. 8 saying buy, 24 saying hold, right? And nobody's saying sell, and nobody's saying it's a strong sell. This is a strong view, and it looks like 12-month price target. They're looking at $77.73 potential price target based on 38 analysts, as you can see here, which is this price volatility is, I mean, quite above average. As I will now showing you this chart. I mean, the price is all over the place. So they're going to be reporting earnings in July 30th, and their expected forecast of 98 cents, I believe is 977 cents earnings per share here in Q2. They're going to be reporting, and as you can see historically, right, they have either matched or beat expectations. Here they hit it as expectation. Here they beat it. Here they were below. But overall, if we look at historically, it's all greens. They're always beating. I mean, there's periods where it's at expectation. Here is below expectation. But I think the overall, they always beat EPS, and the chances of them beating EPS here is going to be high. Active accounts was down by 2%. So this is an interesting number because, yes, you would think when a company has, less custom active accounts that they wouldn't make as many. There might not be as many payments, right? Going through the company. However, that is not true. Despite having the 2% decline in the active accounts, the gross payment volume was up by 13%. For that 2022 year. So that's 1.53 trillion of total payment volume. And despite the decline in the active accounts, this is basically what they do. PayPal has merchants, people that are wanting to sell products, whatever it might be, on eBay or Amazon or their own website, and PayPal helps the customers and the merchants kind of connect and be able to sell products to one another. Buy now, pay later kind of service. You got Venmo, where you can send money to people. Pay later services. Payday, you can do recurring payments such as bills. The processing, you got point of sale, where when you go shop at a store or coffee or TJ Maxx, you're able to walk to the kiosk, scan your PayPal, and just pay using a PayPal point of payment service. I mean, PayPal has multiple ways: peer-to-peer, savings, giving, credit cards, cryptocurrencies, consumer financial services, credit cards and debit cards. I mean, they have all these different services that they have for their customers, and shopping and rewards. They got deals, they got loyalty, they got rewards. So any way they can get customers to come and join PayPal services, they seem to have that. I mean, as you can see, the biggest goal here is to be able to, no matter which part of the business role you play, whether you're selling stuff or you want to buy stuff, PayPal wants to sit in the middle and be that person that kind of helps move money between merchants and consumers, and customers or consumers. So that's it for this video. If you think I'm missing something and I need to add something, go ahead and leave a comment. I think definitely PayPal is on the road to growth. I like the management, what they're looking to do. They're wanting to grow the company as a whole. They're wanting to use AI and make that key um, a key a key element of how the company is going to be growing. So that's it. If you have any questions, go and leave a comment. Otherwise, have a great day.